Let's study Accounting Standard 13, that is, accounting for investments. Investments are assets which are held by organizations for the purpose of earning income out of it. Just say, for example, if you invest in a property, we expect rent out of it. When we invest in shares, we expect in dividend out of it. When we invest into debentures, we expect interest out of it. So on and so forth, like for government bonds and multiple other things that we invest into, we expect return out of it. Accounting Standard 13 talks about accounting for investments. These investments that they hold, that organization holds, how to account for it at the time of purchase of the investment, at the time of sale of the investment, which also includes calculation of profit or loss at the time of sale, interest or income earned by the investment when we receive the income, how to account for it. And lastly, at the end of the year, how to value those investments and record in the books of accounts. So, Accounting Standard 13 gives us how to record for these investments under all the four scenarios. Okay, Accounting Standard 13. Now, Accounting Standards 13 says that all investments are of two types. Investments can be divided into two types. The two types of investments are one, long-term investment, and second, current investment. Long-term investment, okay. Long-term investments are those investments which the investor at the time of investing has the intention that he is going to hold the investments for a long duration, let's say more than 12 months. Okay, so it is on the intention of the investor. How long does he intend to hold the investment? That will decide us whether it is a long-term investment or a current investment. Okay, now as per Accounting Standard 13, all long-term investments must always be valued at cost price. Accounting Standard 13 says that all long-term investments should always be valued at cost price. But if there is a permanent diminution or permanent decrease in the value of asset, then it should be valued at market price. If there is a permanent diminution in the value of the investment, then it should be valued at market price. Let's say, for example, there was a company XYZ Limited, of which the organization, that is us, we bought shares in year one for 1 lakh rupees. Okay, so can I say this is the cost price of those shares? At the end of the year, the market value of those shares was about 1 lakh 20,000. Okay, so as per Accounting Standard 13, since this investment that we have made, we are having the intention of holding it for more than 1 year. Therefore, this becomes a long-term investment and it should be valued at cost price. In the year two, the cost price is obviously remains same as 1 lakh. And in the year two, market value of these investment became 1 lakh 35,000. Okay, so obviously again we will be valuing it at 1 lakh. In the year three, 1 lakh, and now the market value is 1 lakh 5,000. Okay, okay. So again it will be valued at cost price. Okay, in the year four, cost price of these investments are 1 lakh, and there is a permanent diminution in the market value of these shares because let's say, for example, the company is having cash losses, or the business is not working out, or there's a downfall in the business, and if that downfall is permanent in nature, due to which the market value is only 40,000 now, then as per Accounting Standard 13, if there is a permanent diminution, then it should be valued at market price, and the difference of 60,000 will be charged to P&L. Okay, so as per AS 13, first of all, how do we do the classification? It depends upon whether the intention of the investor is to hold the investment for more than 1 year, then it becomes long term. Otherwise, it becomes current investment. Okay. A long term investment should always be valued at cost price. But if there is a permanent diminution, then please value it at market price. And the difference between cost price and market price should be charged to P&L. Okay. Now, talking about current investments are of two types. Okay. They are fixed income bearing investment and variable income bearing investment. The two types of current investment. First one is fixed income bearing investment and second one is variable income bearing investment. Now, the fixed income, as it says, fixed income, matlab from your investment, annually you're getting fixed return, like for example debentures, okay. Variable income matlab how much returns we will get. It is not fixed, it is variable. Then best example for variable income is shares. Like how exactly we know shares, how much dividend we will get and what rate and what date we will get the dividend. We don't know. It changes annually, correct? So that is why shares are categorized under variable income bearing investment. So there are two types of investment. One fixed income bearing, जैसे debentures हो गया, government bonds हो गया, investment in government bonds which carry a fixed percentage of return, then they will be called as fixed income bearing. Now, accounting standard 13 says that both fixed income and variable income bearing investments should be valued at the lower of cost or market price. So we should compare the cost and the market price, and whichever is the lower, at that we will value. To find the cost price, we have been given two methods, that is weighted average method and FIFO method. Okay, these two we will directly understand with the help of the question. For now, we'll know that there are two methods given to us, one weighted average method and second FIFO method. Okay, now quickly summarizing what I just said, accounting standard 13 talks about accounting for investments. Investments are what? Assets held by the organization with a intention of getting income out of it. We have to learn accounting in four scenarios. One, purchase, sale, which includes calculation of profit or loss, income, and at the valuation of year end. As per accounting standard, there are two types of investment. One, fixed income bearing and second, variable income bearing. Fixed income bearing, two types of investment, long-term investment and current investment. Long-term investment are those investments which the intention is to hold it for more than 1 year, and current investments are those investments apart from long-term investment. Long-term investments should always be valued at cost price. Current investments should be valued at the lower of cost or market price. Okay? Now, first we will be learning variable fixed income bearing investments. First, we will be learning fixed income bearing investments. Let's say, for example, at the start of the year, we have 9% debentures of rupees 100 each of Reliance Industries Limited, which is purchased at rupees 93 per, which is purchased at rupees, which is 93 per investment, and interest dates are 30th September and 31st March. Okay? Now, how will we account for this? We write the format, date, particulars, nominal value of the investment, amount, that is how much we have paid or how much we have received, and interest. Okay? Now, first one, At the start of the year, that is 1st April, we already have. So we write to balance bond down. Nominal value of the investments will be 100 into 100 debentures. So that makes it 10,000. Now, amount, you have to understand. I have 100 debentures which I have purchased only at rupees 93. So this makes it 9,300. Okay. Now what happens? We further purchased on, let's say, on now the next transaction that happened was on 30th September, we are going to receive interest, correct? So on 30th September, on these debentures, we will receive interest. So we write here by bank, this is your interest. Obviously, interest will always be received on the nominal value. So nominal value 10,000 into 9% for 6 months. How 6 months? Last interest date would be 31st March. So April, May, June, July, August and September. So into 6 divided by 12. So that makes it, I think, 450 rupees. Okay. Now comes the important part. Please pay full as much attention as you can. Very, very, very important. Okay. On 1st January, we further purchased the uh, debentures of Reliance Industries Limited. So I write here to bank. Ma'am, how many debentures did we purchase? We further purchased 50 debentures. So can I say 50 into 100 rupees is the nominal value. That makes it 5,000. Okay, that is the nominal value. Now, at what price did we purchase? Very, very important calculation. Please pay full attention. Now, 50 debentures that you purchased at rupees 48 per debenture. 48 cases, sorry. At rupees 98 per debenture. Now, we have to ask whether this price is inclusive of interest or exclusive of interest. Now, what am I trying to say here is you have to understand the last interest date was 30th September. We are purchasing on 1st January. Matlab October, November, December, 3 months. Somebody else was the owner of these debentures, correct? Since somebody else was the owner, and on 31st March, again, when I get interest, the company is going to give me interest for 6 months. But out of 6 months, can I say somebody else was the owner for 3 months? So today, at the time of purchasing, I have to pay interest for 3 months from 30th September to 31st March. For this period, I will be the owner only for these 3 months. Somebody else was owner for the last 3 months. So this 3 months ka interest we have to pay today at the time of purchase. If the question states that this debenture is excluding interest or ex interest, then that means along with this price, we also have to pay interest separately. Or if the question says come interest matlab in this 98, interest is also included. Now how? I will show you how to exactly calculate. Pay attention. Okay. Now, so first we should calculate the interest. On 50 debentures, whose value is 100 rupees each, 9% for 3 months. Let's calculate. 50 debentures of rupees 100 each, 9% for 3 months will be about 112 rupees. 113 rupees. I'm just rounding it off. Okay. Will be about 113 rupees. Now this is X interest. Matlab excluding interest. That means that for the investment or for the debentures, I have to pay 50 into 98. That is 4,900 for the debenture. Along with that, I have to pay 113 also. So total payment will be 4,900 plus 113, which will be 5,013 rupees. Am I clear till here? But if the question states that this is cum interest, matlab including interest, that means that interest portions will be same 50 into 100 debentures for 50 debentures into 100 per debenture, 9% for 3 months will be same 113 rupees. For investment, again you have to pay 50 into 98, that is 4,900, but this 4,900 includes interest. So actual investment part will be 4,787. So total payable will now be obviously 4,787 towards the investment and 113 towards the debenture, which will be 4,900. Am I clear here? That is the whole concept of X interest and cum interest. X interest matlab this value that is given does not include the interest portion. So apart from paying towards the investment, we also have to pay towards the interest, because the logic is very simple. Correct? No, logic is correct. No, 3 months he was the owner, and on 31st March, when the company gives dividend, the company will give fully to me for 6 months, wherein I was not the owner for 6 months. I was the owner only for 3 months. So that is why 3 months interest I have to give him today. Am I clear till here? X interest means excluding interest. Cum interest means including interest. Now here, let's assume that it is a X interest. So 50 into 98 will be 4,900, and interest as we calculated will be 113. Okay? Now, one more situation we will take. Let's say on 1st February, on 1st February, the company sold 50 debentures at rupees 100 each. 50 rupees of rupees 100 each at rupees 99. Okay, then how will we calculate? So we write here by bank. Okay, we are selling, obviously we will receive money, bank account debit, investment account credit. Nominal value 50 into 100, which will be same 50,000 debentures, sorry, 5,000 debentures. We sold it for rupees 99. I'm assuming this is X interest. Okay. Question remaining silent. Also, we have to assume that it is X interest. So 50 into 99 will be 4,950. And obviously now, since I was the owner for October, November, December, January. 4 months. I was the owner. So when I am selling, I will collect interest from the other party. So the interest portion will be 50 debentures of rupees 100 each, on which 9% for 4 months. 50 debentures of rupees 100 each, on which 9% I will calculate for 4 months. So that is 150 rupees. So 150 rupees I will collect from the person whom I am selling to. Okay. Now, since we are selling, we have to calculate profit or loss also on sale. How to calculate profit or loss? Now, so calculation of profit or loss on sale. Excuse me. Okay. Now, normally, how do we calculate profit or loss on sale? The profit will be calculated as selling price minus the cost price will give you profit. Correct, everybody? Now, in this situation, can you see selling price is 4,950? So, our selling price is 4,950. Okay. Now we have to calculate what is the cost price. Now we have to calculate what is the cost price. Pay attention. Can I say I have a total of 15,000 debentures? Correct? For which total money I have paid 9,300 and 4,900. So total money that I have paid is 14,200 rupees. Correct? So for 15,000 debentures, I have paid 14,200 rupees. Then for 5,000 debentures, what is the cost? Once more, for 15,000 debentures, I have paid a total money of 9,300 plus 4,900, that is 14,200. Then for the 5,000 that I'm selling, what is the cost? Cross multiplication. 14,200 into 5,000 divided by 15,000. That will give me 4,733. Okay. Selling price 4,950. Cost price 4,733. Therefore, we have made a profit of 217. Clear till here? Okay. Now, profit is written in P&L account on the credit side. So, in investment account on the debit side. We write here on 1st February on the date of sale to P&L, which is we made a profit of 217. 217. Okay? Now, lastly, at the end of the year, we write here by balance carried down. Okay? 10,000 debentures were there, plus 5,000 purchased. So 15. Sold 5,000. So remaining 10,000. Value same, we can find how we did this calculation. This is to find the cost price of the investment. Then you should compare it with the market price, which should be given in the question. Okay, if question is silent, assume that it is not there, value it at cost price. And interest column, whatever balancing figure you get should be charged to P&L on 31st. Okay, so this is your fixed income bearing investment. Certain things you have to take care in fixed income bearing investment. One, date of interest. Date of interest, often students tend to miss out. When the sum is given, they tend to miss out. Oh shit, 30th September, we had to record for the interest, but in the flow, we forgot. So one, date of interest, very important. We should always record for it. And second, majority students tend to forget that we have to calculate profit on sale. Whenever there is a sale, there will be profit or loss, and we must always calculate it. Apart from that, yes, obviously you have to take care whether it is X interest or cum interest, and you should do it. Okay. Now let's go ahead and understand variable income bearing investment. Variable income bearing variable income bearing investments are very easy. Let me just quickly show you how it is to be done. Number of shares, because shares are variable income, amount and dividend. Okay. Now, same way we'll have year start. Same. We will have balance brought down. We will have number of shares and amount as given in the question. There will be no balance bought, no dividend. Okay. Now, then let's say we purchased further shares. So what will we write here? To bank. Correct? Number of shares will be there. Amount, how much? Now, guys, here there will be no funda of X interest and cum interest because they are variable income bearing. Date is also not fixed, rate is also not fixed. So there will be no funda of interest at all, X interest or come interest. If they have told 100 shares purchased at rupees 22, so 100 into 22 will be your amount. That's it. No calculation of X interest and come interest. Directly write the amount because dividend is not fixed. Okay. So this will be further purchases. Then let's say, for example, the company that we have invested into the shares, that company issues bonus shares. So can I say the number of shares will increase, but as we know, bonus shares are free shares, so amount column will not be there. Okay, so the amount column will not be there. Okay, then we have right shares. So for obviously for right shares we have to pay. So we will pay for the right shares. Number of shares will be there, amount will also be there. Okay. Now let's say we sell the dividend. So we write here, we sell the shares, we write to bank, this is sale, same number of shares and amount. Again, because there is a sale, there will be profit or loss calculation, and the same way for these many shares, this is the cost. So for number of shares sold, what is the cost? Same exact way we will be doing profit or loss calculation. Okay. Now comes the very important part of variable income bearing. Very, 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 very important part. You must pay attention, and it is so beautiful. Very, very important part. Pay attention. Now, the company has issued dividend. How to record for that? By bank. Now we are going to receive dividend. Okay. Now, first, a little understanding before we go to that. Let's say our year started on 1st April 2006 and ends on 31st March 2007. Okay. On this date, we already had the shares. On 1st June 2006, we further purchased shares. I'm talking about this one. We further purchased shares. Then somewhere here we received bonus, and somewhere here we received right shares. Doesn't matter, whatever date, doesn't matter. Okay. Now full attention I want. Today here, the company is giving dividend. I'm assuming, I know the timeline doesn't look really fine. Let's say today's date is dividend. The company is issuing dividend on 1/9/2006. Obviously, can I say this dividend that I am receiving on 1st September 2006 is dividend for the last year? Last year, that is 2005 and 2006. Correct? Now, in the last year, these shares that I had at the beginning of the year were obviously existing, and I was the owner of this dividend. I was the one who was holding these shares. So, since I was the owner of these shares throughout the last year, and I was holding the shares throughout the last year, then I am eligible to receive dividend. I am eligible to receive dividend here. This is my dividend. I have earned it. Correct? These shares were there last year, but I was not the owner because I have purchased here on 1st June. Last year, I was not here. Here. Somebody else, these shares were existing, but somebody else was the owner. Since now I am the owner, I will receive the dividend, but I am not eligible. Why am I not eligible? Because I was not the owner in the last year. उसका calculation कैसे होगा? Very, very important. This dividend that I receive, when I am the owner and I am eligible to receive, is called as post acquisition dividend. Post acquisition matlab after I acquired, I have earned the right. Okay. And this dividend where I was not the owner, somebody else was the owner, and I am getting the dividend because right now I am holding the shares, then this is called as pre-acquisition dividend. Pre-acquisition ka matlab, I was not the owner at this time. Counting Standard 13 says that this pre-acquisition dividend should be reduced from the cost. That is, your cost will now decrease. Okay? Matlab, your post-acquisition dividend, how will you calculate? Opening balance of shares, this balance of shares, into fair value each for each share and percentage of the dividend, the rate of the dividend. That will go to dividend column. Pre-acquisition dividend, that is your purchased into the fair value of each share into the percentage. Now it should be reduced from the amount. So we write it in the amount column. This will reduce my cost. I was not the owner. Okay. Now, if the company gives interim dividend, then what to do? Then interim dividend, can I say, will be received on here, obviously, I'm assuming that the dividend was received here after the bonus and right was issued. Okay. So on all shares, if there is an interim dividend, then on all shares, we will multiply fair value and the percentage. Okay. Now, that's what is about dividend. The same way at the end of the year, we will write number of shares, we will write the amount. This amount will be calculated. This amount will never be a balancing figure. It has to be calculated. And we will calculate it as cost or market price, whichever is lower. And for cost, they have given us two methods. One is weighted average method and second is FIFO. Whatever question says, with that method we will utilize. Okay. And dividend too will not be there. So with this, I have kind of summarized Accounting Standard 13 for you. Okay. Thank you. Bye, everybody.